All right. Good morning, team. Good morning. Good evening. I also saw some people. Good night from my side. Exactly. Good evening. Good afternoon. Good afternoon from South Africa. Good evening from I imagine the other side of the world. Love to see it. How is everyone doing? How is everyone doing? Will not be able to watch live, but I know it will be money. Let's go, Ario. Love to see it. Love to see it. I know it will. I know it will. No worries at all. No worries. That's why that's why YouTube records them, so you can watch them back as well. So no worries if you're not able to watch them live. No worries at all. Waiting for USDJPY buys. That's an interesting one, to be honest. That will be an interesting one. We're doing great, boss. Love to hear it. Love that. Love that. Love that. Let's see. Let's see. Yeah, to everyone that's of course involved in the Ramadan, best of luck. Let's see. Hello from Holland. When moon? Well, I'm not too sure. I'm feeling I'm not really involved in crypto, to be honest. So I don't know. Always when I see it on Twitter, etc., it feels like I'm missing out a little bit. But I'm just not that involved in crypto. It's not my thing. It's just not my thing. I don't know. I've tried it in the past, but it's just not my thing. Greens from Dubai. Oy, oy, oy. Lovely Dubai. Love that. Love that. Let's see. Let's see. What a week it was. It was a very interesting week, to be honest. I'm not sure how everyone... Are you, sir? Please show your face. Yeah, to be honest, my camera is currently not connected to my PC. I also didn't really feel like showing my face at 7:30 in the morning. I don't know. I don't really feel like having a camera faced at me at 7:30 in the morning. It's not the nicest thing, to be honest. I hope you can understand. Let's see. Let's see. Here is the dollar really that important? Because it consists of a Canadian dollar, JPY, GBP, CHF, and euro. Yeah, so the way that works essentially is the dollar is the world reserve currency. So the dollar is basically everything. And what you'll see often is that everything revolves around the dollar. So even if we look at Australian dollar futures contract, this is just essentially Australian dollar US dollar, because Australian dollar futures, they just move in the opposite way of whatever the dollar is doing. So that's the most important thing. That's why it's quite important to understand. So is it super important? I think if you do not like looking at the dollar, you can definitely make it work by just looking at overall the other forex majors, etc. But for me, it's just an extra. I won't see the garden. I'll just put my face cam just on the garden right there, and you can enjoy all the birds in the garden, etc. Let's see. Did we get number 3? Red weekly candle on indices. That's actually also very interesting what the indices have been doing as well. You look baby face. I have a baby face. I'm not that old. I'm 22. Don't judge me. Come on. Give me some time. Let's see. I'm going to try to watch your videos to see if I can be a profitable trader. Wish me luck. You can, my friend. You can. Just give it time. Give it time. Find and pick what resonates with you. Stick to it, and you will 100% make it. 100%. No worries at all. Can one earn whilst learning in the masterclass? Yeah, it's always a difficult story. That's a difficult story. I would argue... Don't expect it. Don't expect that you'll earn anything whilst learning. That's the best way to go about it. Otherwise, we create potentially false expectations. Let's see. Trader MB, what's up, my brother? What is up? Appreciate the support you give from time to time. Appreciate your support, my friend. Love to see it. Love to see it. Haven't seen you in a while. Love that. Greetings from Poland, man. Good to have you here live. Love to see. Good to have you here live. Would you recommend to start with your videos? Could you make a video like ICT did? I could actually. That's actually a good idea, potentially, making a video on where to start. I would advise, if you're... I'm creating, by the way, a complete beginner guide, so that the first video is also ready. As in, we're talking about candlesticks. What is a candlestick? So it's a full, complete beginner. So potentially if you have friends or whoever is interested in trading, then you can send them towards that channel. But if you start from the more advanced stuff already, then I would advise the A to Z guide. After the A to Z guide, market mastery, and then the individual videos. So the individual videos will also make a lot more sense if you have an understanding of the A to Z guide, market mastery, etc. Do you add SMT as a confluence in your entry? I personally do not. Personally do not. Of course, that's really dependent on my data. I know a lot of people that do use SMT that are very profitable with it, but I personally do not. FEG seems a little complicated to understand. I can understand that for sure, for sure. And it's also why I like, because to me, other things might be a little bit more complicated. I like to have things simple when they are defined. So for me, fair value gaps, they tell me everything because I'm able to define as well everything. And every other concept is just separate involved, if that makes sense. If that makes sense. What's going to happen in EURUSD? Yeah, talking about that, let's dive into it. Let's dive into it. Let's see what we do have and what we are working with. Let's see. On the dollar, let's start off with the economic calendar. Actually, really quick economic calendar. We have FOMC statement on Wednesday for the US dollar. Then Monday and Tuesday, nothing really interesting regarding the US dollar as well. So could be a little bit slower until we have FOMC statement on Wednesday. Keep that in mind as well. That ideally my price action, the price action where I want to get involved is after Wednesday for the US dollar. If it's the indices, potentially still at the beginning of the week, but be careful that you do not get caught up in some weird price action, etc. It's just higher probability overall that Thursday and that Friday for me. So if we take a look at the dollar, what actually happened, a real quick breakdown right here of what happened last week. It's also quite important to do, I think, especially since I made a top-down analysis video right there. So the original target was that low. And once we reach that low, we can now look at this fair value gap to continue lower off of. We got nice price action right there with a nice wick to continue lower. Where we mentioned the previous day low right there is then the first target. After that, we can just select any discount rate that we have below that as well. That next discount rate is essentially that swing low right there. Now, what we saw was also quite interesting because that previous day low, and it's visually more clear on the 4 hour and even on the 1 hour, we can see that this swing low is showing early signs of a sweep actually, which is in a little clip that I showed in the video as well. That's a little clip of the forecast I show in the money making team. And in that little clip, I did not mention anything about this right here to continue lower off of that. Why not? Well, let's look at this from a logical perspective. If we want to sweep this low right there and not run the low. So again, really quick, what's the difference between a sweep and a run? Sweep right here, we will sweep that low and we will target the opposing highs, opposing liquidity. A run, we will just continue running towards the next discount array sitting right there. Now, at this moment in time, what do we see? We actually have already on the 1 hour fair value gap going higher. I mentioned if we can get a new fair value gap lower right there, getting comfortable below that low. Why? Because if we're comfortable below that low, that means we are not actually trapping liquidity. And when we're not trapping liquidity, that means that we can likely continue lower. So here, it was very interesting to see, because if we now want to make that retracement towards that 4 hour value gap to continue lower off of that, then I would argue, all right, well, that actually is more so looking like a sweep than anything. So that's why I mentioned in that forecast as well, I want to see already for value gaps continuing lower again, not a retracement into that 4 hour value gap to then continue lower off of that, because that right there is then even more so a sweep. It's more of supporting the idea of a sweep because it's actually continuing higher right there into that fair value gap. Small little detail, quite important to understand overall. And let's see if we can understand right here the rest of the price action. So after that, we had PPI on Thursday, 8:30 a.m. as well, which we came into those highs, and you can potentially, quite clearly, I would state, see the difference between the sweep versus a run on liquidity right there. The value gap overlapping, absolutely perfect. So here, the momentum was just very, very bullish. It was a lot of reacting throughout this week. It was not necessarily a clear fair value gap, we can continue lower off of that. It was a lot of reacting. Let's sweep first the run. I think it's time for another video on that because it's so extremely important to understand that and retracing those steps, because a sweep can be seen as early as just having a wick right there. It's not confirmed yet, but we can see, all right, we might want to sweep that. So that's very important to understand. So what do we want to do after that as well? Well, we have a weekly fair value gap sitting right there. Do I expect lower prices off of that weekly fair value gap though? That is now the question. Well, in all honesty, I'm very suspicious of higher prices right here on the dollar. And the reason I say that is because when we have this much momentum coming into a fair value gap like that, oftentimes that either creates a bigger retracement before we continue lower, not necessarily stinging into it to then perfectly continue lower, or even higher prices right there. Because simply said, there is a lot of momentum coming into that weekly fair value gap. And that's ideally what you don't want to see. So the way you can see that, of course, is if we have a fair value gap continuing lower, then ideally you want to see somewhat of a consolidation, sting into it to continue lower right there. That's the perfect setup. That's the utopia setup. But if we have something like this, and we have fair value gap continue lower, and we get a lot of momentum like this coming into it, that's extremely suspicious that we might actually want to continue higher or at least have a bigger retracement. So that leads me to think right here that we also have a sharp turn below that previous month's low right there coming into that weekly fair value gap on the daily time frame right now. That's very 50-50 for me. Again, remember what we talked about in top-down analysis video, the bullish argument versus the bearish argument, those two people right there that are arguing right here. I would argue as well that this is looking 50-50, pretty 50-50 at this moment in time. Now, it's not a huge or a bad thing because we have FOMC on Wednesday. So I'm not even trading the US dollar on Monday, Tuesday, or Wednesday. And FOMC, since it has a lot of volatility, most likely coming into the market, that means it will do whatever it wants to do, continue order flow, or just continue higher, continue lower, and we will see that after the fact. So we also don't need to be stressing ourselves on, oh, what can it potentially do? No, because FOMC will just simply show its hand as well. So use that to then wait for that as well. It saves you a lot of mental equity as well. It saves you a lot of mental capacity. It's very important to understand. But in all honesty, if we are looking at this, then higher prices is not too crazy of an idea. If we do get lower prices again, then I would want to see more confirmation, at least disrespecting that daily fair value gap right there. So with that in mind, let's look at some of the indices. And this is actually also really interesting. Russell, we talked about this sweep of that high already, what was it, last week? Where this definitely looked like a sweep. And again, you can see the same characteristics, right? It all starts with just a wick, not a fair value gap overlapping with that high. They all start almost the same. Almost 9 out of 10 times they start the same as well. So right here, if we take a look, then right now we have a bearish daily fair value gap being created right there, which we can potentially continue lower off of. Now, the only resistance that we have right here is this weekly order block as well. So right now, this is what we talked about in Market Mastery. Actually, this is 50-50 price action. And what I mean by that is if we want to continue higher, we can continue higher off of that order block right there. If we want to continue lower, then we can continue lower off of that daily fair value gap right there. That creates that we are in between a premium and a discount rate. So we're both pushing higher and lower. That creates balance in the market, meaning we will consolidate for a little bit right there, potentially. Now, ideally, I want to wait if we do want to continue lower here, see that daily value being traded into to then have a nice rejection continue lower. Because after that, if we now do not continue higher off of this weekly order block, then we have no resistance below that. So we can expect once we reach below that low, price action will most likely happen quite fast, which might even happen during FOMC that we just fall off a cliff right there, which will definitely be very interesting to see as well what we want to do right here on Russell. Then if we go into ES right here. So we've been talking about the indices for quite some time right now that it feels like the indices are just ready for retracement, and I don't want to force a retracement. So I don't want to force and call a top in the market right there because that is not the probabilities. Overall, we've been going higher, but we are failing to create fair value gaps. we are just failing to push higher constantly, with the dollar potentially now continuing higher as well. That lines up perfectly for a bigger retracement on the indices, potentially again, right? This is all very premature. This is almost like guesswork what I'm doing right now. So we have to look at the probabilities right here if they are truly supporting the ID. Now, what do we see? We can clearly see that price it's trying to push higher. It's failing to do so. It's just struggling to push higher overall. Do we have anything we can target right here? Currently, not really. We have this all-time high fair value area right there. If we create a monthly value gap in 11 days, that could be very interesting. Now, I'm mainly interested in the 4-hour right here, because if we do want to continue lower, we currently have order flow continuing lower right there as well. This 4-hour value gap is quite interesting, although that is quite a heavy retracement right there to then continue lower. So if we do want to do that, then I want to see that equities open very quickly to then continue lower. Or what could also happen is we already start to continue lower right there with new fair value gaps, potentially on the 1 hour as well, 15-minute, to then target the lows that we have sitting right there, which could definitely be very interesting. I do like this price action. These are nice targets right there, because that is the low resistance liquidity round right there. That is where we have no resistance essentially until we reach these levels right there. So that could be very, very interesting as well. Do quite like it. Do quite like it. Now, NASDAQ, very similar. NASDAQ is already weaker. So here we are just continuing lower overall. Ideally, what I would want to see is a fair value gap, a daily fair value gap here, exactly overlapping with this low. Again, indicates that we are definitely running that low to then continue lower potentially. We have reached a big, major liquidity pool right there as well. So we could see somewhat of a rejection right here. Ideally, I want to wait for a daily fair value gap and not this 4-hour value gap right there. And the reason for that is because if we do retrace into that 4-hour value gap, we can still say, well, we are bearish, but it does become a case again of, are we potentially sweeping that low instead? So then it becomes a little bit suspicious again. So I would prefer the daily value gap. If we do come into that 4-hour value gap, I would still expect lower prices, but I would want a little bit more confirmation as well. Looking at YM right here, this has been overall not the nicest, I would argue. NASDAQ, ES, etc. have just been nicer. If we do take a look at the weekly, really quick at the monthly as well. Yeah, it's just a messy price action. Don't really like it. Weekly right here. If we take a look at the swing low, which we could potentially target, and well, very early on, the earliest targets we have is that swing low as well, which you could target. So how can we deliver there? Well, what do we see? We are disrespecting that daily value gap right there, disrespecting that order block as well. On the 4-hour, do we have any 4-hour value gaps we can continue lower from currently? Well, this one. But again, that one is not interesting to continue lower off of, because then we have to make a retracement like that to then continue lower. Doesn't make a lot of sense for price action to do that. It's close to the drawn liquidity, likely wants to run already. So here we have this 1-hour order block right there, which is unfortunate that it was on Friday, but that is actually quite interesting to already continue lower off of that. Very interesting price action on the indices and what we also saw throughout the week. Then on DAX right here, DAX is a little bit more difficult. And the reason I say that is because we just reached that high right there. We're constantly sweeping those highs off of fair value areas, off of the fair value gap right there. We are sweeping the highs constantly. And with the indices potentially continuing lower a little bit, does DAX actually want to continue higher? I don't believe so, because DAX will likely follow the other indices as well. DAX and the other indices are, what is it? I'm not too sure actually on the actual percentage, but I believe it's around 80% correlated. So that means that if the indices want to continue lower and the other indices are stronger right there, then DAX, if it wants to continue higher, it doesn't have a chance. It doesn't stand a chance to actually push higher right there. It will either consolidate or just push lower overall. So I'm not necessarily expecting higher prices here on DAX. Again, at all-time highs right now, so also want to be a little bit more careful. Australian dollar, US dollar. Let's remove everything we have on the chart and let's start on the monthly. On the monthly, we are seeing this monthly fair value gap right there. Now, this is just the same as the dollar, where right here, if we want to push higher, then we have this monthly value gap that we can actually push higher from right now. Then on the weekly, we see that we have failed to create a weekly fair value gap higher right there after an expansion phase. So after this phase right there, ideally, we want to see a weekly value gap being created higher, of course, shows intention. So we are coming into this premium array in the form that swing high right there. We sweep that swing high to then continue lower right there. Now, this is similar to dollar, and the reason I state that is because if on the daily right here, we now start to establish bearish order flow and we come into fair value gaps to continue lower off of that right there, then everything will fill. And that creates, as we know it in the MMT, a dominoes effect. So on the dollar, that can also be seen by if this now starts to fill right here, this overlapping defense right there, then this high becomes the target right there. Then that high becomes the target. And then the monthly fair value gap is failing. So now all these highs, this high right there becomes a target. So all of a sudden, because we have one small premium array failing, every premium array that is sitting right there starts to fill. So then the target becomes quite nice. And again, that's quite premature. So if we wait for that, then that could be very interesting as well. And that's very similar to what we're seeing on the Forex majors in the form of Australian dollar, US dollar as well right here. Now, we already came into the overlapping defense right there, which we could continue higher off of right there. After that, we start to fill those 4-hour value gaps right there, which we did not continue higher off of as well. So all seen again through that dollar sweep. So that dollar is determining almost everything, makes it a little bit easier to understand what the rest also wants to do. Then this right here eventually even became interesting for short later on in the week. Now, right here, if we do want to continue lower, we have that daily fair value gap right there. Will we reach into that? Potentially with FOMC. In the meantime, I would also want to wait for FOMC. I am not necessarily expecting higher prices off of this order block right there, because we already came into the actual open, which is the wick right there, because the wick is overlapping with the fair value gap right there. Then on EU right here, also very interesting price action. And if we do take a look at this, what are we dealing with? Essentially, the dollar inversed. We have that weekly fair value gap right there, which we could trade into. So how can we do that? Well, we have a daily fair value gap sitting right there as well. So that could potentially push into the weekly value gap, or we could already push into the weekly value gap earlier on. Now, it will be very interesting to see right here if this daily value gap wants to hold or the weekly value gap wants to hold. Seeing if we disrespect one of those fair value gaps, and that will determine for the rest of the week what we actually want to do. In the meantime, that's quite 50-50, because here, if we do want to continue lower, then we're in early stages to continue lower right there. So we can wait a little bit longer to actually have the confirmation that we do want to continue lower, not being early and essentially just being impulsive and trying to FOMO in. That's very important. So right here, I would want to wait for that as well. What we saw throughout the week was also quite interesting. Now, other than that, right here, it's just a lot of waiting, especially for the Forex majors. If you're not going to actively trade it ahead of FOMC, then my advice would always be take it a little bit easier with your own forecast as well, because it's not super relevant whatever happens before FOMC, because FOMC will just do its own thing. So right here, if we take a look at GU, then we see again, similar scenario. I believe I've emphasized it on it enough right now. I hope you can see it, that we are not creating that fair value gap above that external high right there. So we can make a retracement into this breaker right there, fair value area, to continue higher off of that. But it's already a little bit more suspicious. So what we see, we fail to push higher. We create a daily fair value gap lower right there, and we have a weekly fair value gap sitting right there below that. Again, the momentum coming into that weekly value gap to me is just not that interesting. I would want more confirmation if we do want to continue higher. And that's the same for EU right there, where that weekly value gap trading off that is just not too interested on that myself. I do not really like having a lot of momentum coming into that fair value gap right there. So I would almost prefer already lower prices, but I would also want a little more confirmation to be confident about those lower prices right there. Ideally disrespecting the weekly fair value gap, trading through it. That would be ideal. New Zealand dollar, US dollar. I do not really like this, and the reason I don't like this in comparison to Australian dollar, US dollar, EU, etc., because no fair value gaps have been holding here, and that indicates to me again that there's seek and destroy conditions. So Since there are no fair value gaps that are holding, not creating new fair value gaps, higher or lower, then that to me indicates that we are overall in a bigger consolidation, bigger range. So even though, yes, of course, we can continue lower towards those lows, the delivery there might be very messy. So I don't want to trade this right here. If you do want to continue lower, I would personally wait for a new fair value gap lower to continue lower off of that. US dollar, Canadian dollar. Very similar scenario, to be honest, to New Zealand dollar, US dollar. And what you'll see a lot on US dollar, Canadian dollar, US dollar CHF, US dollar JPY, they have just been consolidating a lot more. And that again leads to seek and short conditions. So we have now reached this order block sitting right there as well. And if we do want to continue higher, we have that daily fair value gap. But do I expect a retracement towards that? Again, potentially FOMC if it's extremely volatile. But if we already have fair value gaps going higher right there, I could see us just reaching higher already right there. Again, less interesting to me. And the reason for that is because overall, the bigger picture is telling us that we are consolidating a little bit because we have not been creating new fair value gaps off of previous fair value gaps for a very long time. When is actually the last time we have done that? Well, we could argue this fair value gap, but that fair value gap, even that one right there, has not been holding nicely to then continue higher and create a new fair value gap. Big retracement into it. So the last time we did that is, wow, that's a very long time ago since we got potentially even last year right there. So I do not like that. That indicates, and it's a perfect indication that we do have some kind of consolidating price action. US dollar CHF. Same scenario right there. Was expecting lower prices first at the beginning of the week off of that right there. After that fails, what do we see? On the 4 hour, we already have, which actually gave quite an interesting setup. We take out the rejection and we have that 4 hour value gap coming above it right there. Perfect price action to then continue higher as well. So right here, if we do want to continue higher, then on the daily, we have a nice daily fair value gap sitting right there, which we can also potentially continue higher from. If the 4 hour already wants to continue higher right here, then a new 4 hour value gap to continue higher off that is also perfectly fine in my eyes. Targeting just the highs right there. Again, I prefer overall AU, EU, and GU. Those are my top three right there. I prefer those simply because they have less consolidating price action. US dollar JPY. So this one is also quite interesting. And the reason it is quite interesting is oftentimes when we have a move lower like this, and there's a reason why I personally did not like it going into last week actually, and that was because we never have order flow confirmed. And that's a huge thing in the MMT as well, order flow. And the reason I mentioned that is because right here, we never retraced into a premium array to then continue lower off of that. So even though we just have fair value gaps lower, that does not mean that that is the real indication of whatever price action wants to do if we do not have a retracement into an actual premium array, which we don't have right there. So a premium array never held at that moment in time. And the reason that's important to understand, because a lot of people will see their price action and will just want to rush into it. And that's essentially not what I want to do. That's why last week I mentioned I don't really like this because yes, of course, it looks quite bearish, but we never have bearish order flow confirmed. So we always had at that moment in time bullish order flow. So that makes it quite interesting to potentially still look at higher prices right here. We have a small weekly value gap. I do believe we can ignore that unless the dollar wants to all of a sudden push lower. But right here, daily fair value gaps to continue higher off of that could be very interesting as well. First target for me would be the fair value gaps that we have. After that, the order block that we have right there, to then the highs right there as well. Then, if we take a look at silver, we have a nice high right there. That is inside as well. Let's see how we want to deliver there. We have a weekly fair value gap, a big weekly value gap right there. That weekly fair value gap, and now it also becomes an understanding. So the reason why I mentioned the top-down analysis video, ideally you want to incorporate or you want to combine that with the market maker model guide that I made, and the one candle tells you everything. Because at this moment in time, the one candle tells me right there that it's not very realistic for this next weekly fair value gap or next weekly candle trade back into it to then continue higher right there. It's quite unrealistic simply because if we're already closer to that drawn liquidity, price will not retrace extremely far to then continue higher off that. And if it does that, then it's already lower probability for me. So I do not want to trade it in the first place. So right here, I would like to see any fair value gap, a daily fair value gap, for example, right there, even potentially a 4-hour value gap, which we do not really have. We have that one. That one is not interesting to me. So then right there, I would want to find a new fair value gap to continue higher off that. But keep in mind, this high right there could be an interesting target. And yes, we are expecting or potentially higher price on the dollar. Silver, gold, oftentimes is the same as the indices, very similar. They are just quite stubborn and they just do their own thing oftentimes. So this might still continue higher a little bit, even if the dollar wants to also continue higher a little bit. Then on gold, let's see. On gold, I mentioned last week and throughout this week as well, I want to see a retracement into the all-time high. And currently we are seeing perfect. We are seeing a perfect fair value gap overlapping with the all-time high right there. So that's exactly very nicely to potentially continue higher off that. And if we do not respect that and we do not continue higher off that, perfect. Then we can potentially look to target lower. So this right here is quite interesting heading into it. The delivery there was not the biggest fan of it personally. I just like to wait for that all-time high right there. We have a weird formation. It's one of those trading patterns right there where we have sort of a wedge. I'm not sure what it's called. But then right there, that creates a consolidation as well. Not too interested in that. Personally, would want to wait for a retracement into that all-time high right there. Then Bitcoin. What are we doing? What are we doing? So Bitcoin right here, we have somewhat of a move lower, 4-hour continuing lower as well. Does not necessarily mean that we are definitely now heading back to 10K or whatever. I don't think that. But we could see a retracement. And the retracement, where are we likely heading for the retracement? Well, that leads me to think, all right, we have this fair value area right there, which we are currently rejecting off of, which is the all-time high fair value area. And ideally, a fair value gap overlapping. That could be the nicest thing, of course, to happen. We have a small fair value gap, which to me, that's not too interesting. So it's a little bit more difficult because we do not have a very clear discount rate, which we can continue higher off of. This for me is not an order block because there is no fair value gap left behind right there. So it's not too clear on what we can continue higher off of right here. But the weekly fair value gap, worst case scenario right there, is still as well what we can continue higher off of right there. I'm not necessarily expecting lower prices right here. I do still think we can somewhat continue higher unless we create all of a sudden a weekly fair value gap right now, an expansion phase continuing lower, just like we saw previously, for example, right here. And that becomes suspicious, of course. Then I would argue, all right, well, now we might actually continue lower. It's very similar to price action actually, where right here, if we reach above that, ideally you would want to look for a new discount rate. We can still look to continue higher off of because there's no real bearish argument. But then as soon as we sweep this high right there, and again, seeing through that wick, we create an expansion phase candle by not even looking at the fair value just yet. Then again, we can potentially talk about lower prices as well. Now, looking at crude oil. All right, we had some interesting price action throughout this week, and we mentioned this previous week low. Well, we mentioned the daily swing low actually last forecast, where if we want to continue higher, that's the only discount rate that we have in this leg to continue higher off that. So it's actually quite an interesting topic because in the MMT, I emphasize on this so much. If you do not copy the PD rates that I use, and you do not need to copy them, right? But you cannot expect the same accuracy that I have if you do not copy the exact PD rates. Because if you were to incorporate inverse fair value gap or order blocks without having a fair value gap, for example, then you would be all over the place here. Where the only discount rate for me, because I use those PD rates and I combine them with fair value gap, etc., the only discount rate that we have right there for me is that swing low. It's the same where we mentioned this swing low and we also saw higher price off of that. And that's simply because that's the only discount rate that we have right there, which we can continue higher off of there. So once we saw a sweep as well of that swing low, we then continued higher off of that. I was waiting for a 4-hour value gap higher right there. And then we saw quite interesting price action after that. It's also quite important to understand, read those 1 hour or read those candles. That's so important because in a breakaway gap video, I might mention as a general rule of thumb, but that's extremely general. There's quite a lot of variables still going into that. I might say if we do not close above that second candle high right there, then this creates a fair value gap, which we can expect retracement back into. But is that extremely logical if you look at that wick right there? No. So what is happening on a wick right there? Well, on a wick, there is just already a 1 hour value gap that is getting respected. So if we already want to continue higher, then we are already displacing higher right there with a new value gap on the 1 hour. So we can already look to continue higher off of that instead. That led to overall pretty interesting price action right here on crude oil. Quite interesting. Personally, was not a part of it. Was a part of no, was not a part of it. Was part of later, I believe, right here during the live stream a little bit. Right there on the 4 hour. Oh no, I did not actually catch that move. My bad. So right here on the 4 hour, we continued higher and we have this fair value gap overlapping with the fair value area with that high. Perfect. That again indicates that we might want to run that liquidity. So not sweep it, continue lower, run the liquidity. So that's a great sign right there. Then we do leave behind, and since that is a Friday, we have already been trending throughout the week. So the volatility just dies down a little bit on that Friday. Can't really expect a new trending day right there. And on the daily right here, we have this daily fair value gap sitting right there, which we can also look to continue higher off of potentially, unless we already create a 4 hour value gap higher right there as well. With the first target being that line, and that is a 4 hour swing high towards the left. So crude oil will definitely have my attention throughout this week. Is definitely quite interesting to me. I quite like it. I quite like it. And crude oil, once you have a clear direction in crude oil, it's just the same as the indices. It's very nice delivery. Happens very fast, etc. But it can also be a pain in the ass with all that consolidation. Bank Nifty. All right, this one is quite interesting right here. And the reason it's quite interesting is because we are now failing to create a weekly fair value gap higher right there. So what is an early sign? Well, an early sign, and at the moment in time when I did not want to look at it anymore, was actually at that Monday. So because that Monday here on the 4 hour, we could continue higher off that order block right there. And on that Monday, we failed to do that. So we already have a move lower. As soon as that happens, I'm not interested in longs anymore. If anything right here, we might be going lower a little bit. But again, let's remind ourselves, overall, we have been bullish right here. So I do not want to get to too early conclusions. We have not created a daily value gap lower just yet. So I would simply still want to wait here until we get somewhat of a more clear direction. Not too sure on what it wants to do here personally. So I want to stay out as well. All right. That was some information. Let's see. Can someone suggest a good mic for YouTube recording? I personally, you can judge for yourself if you think it's a good mic. I personally have the Sennheiser MKE 600. I also had before this, I had the HyperX Solo Cast. But this one is more from a distance as well. So that's why it also sounds a little bit different. What's the meaning of PD array? Premium and discount array. So essentially, what is a premium or discount array? You can see it as very simply said, support and resistance, but there's of course a more logical explanation behind it as well, where a premium array is a short-term premium, as in that is where we can already continue lower off of. If you look at it from, for example, supply and demand, they always expect a retracement into premium or fully discount. But a premium array right there, you can see, is not in the 50%, for example, but it is offering a premium array. So we can already continue lower off of that while it's not coming into the premium. Very interesting. Please tell about your trade management and risk management rules. Yes, I was thinking about that actually. I have that one planned. So that's a funny coincidence that you mentioned that. I have that planned actually. It's a good one. I was going to go over a good risk management strategy. At least good in my opinion, of course. You can judge for yourself eventually. I'm loving your channel. Thank you, sir. Thank you. I appreciate that. Does gold follow dollar? Yes. But like I mentioned as well, a little bit less, as in it's stubborn. Gold is stubborn. Gold sometimes, whilst the dollar is just moving higher or lower, it will just do its own thing. And it's the same with the indices. It will just do its own thing as well. So that's important to understand. Yeah, I think a huge thing as well, which I mention oftentimes, that this simple strategy, But of course, if you have zero clue on what a candlestick is, or you have zero trading knowledge, or you have not even watched, for example, an ICT video, then it becomes quite difficult to understand what I mean. So for you, it might not be simple. Where someone, and a lot of people that came from ICT to then watch me, that it all of a sudden makes sense. It becomes very simple. Or someone that has watched the full A to Z guide, then it becomes very simple. So simplicity in that fact is also very subjective. So find what's simple to you, which I would argue, all right, what is simple for me then? For me, simplicity is from coming to being able to define things. That makes it quite simple. It's like a good cook. A good cook might ask you, all right, well, making an egg is very simple, right? Very simple. But it's simple to him because he knows the recipe to get to that egg. Where if you don't know the recipe, then it might not be simple to you, but you just don't understand a few definitions to get you towards that end result of that egg, if that makes sense. So it's very similar in that sense. Let's see. Can you allow to turn on CC for the live stream? Let me check that really quick, my friend. Let me check. I'm not too sure where I can do that. I'm not sure that if it's live as well, or if that happens after the fact. I'm not too sure. I would have to check after. I have to check. Can you make a video about how to do case study? Is it like backtesting? I can do it right here really quick. Case studies oftentimes are quite overcomplicated, as in all you really need for a case study is either a pen and paper, a Notion, whatever it may be, something where you can write down your thoughts. So how you want to do a case study is, for example, if I mention the one candle tells you everything video, then right here, what I would want to do is I just want to go in hindsight backtesting. I do not want to go backtesting because backtesting is the opposite of what you essentially want to achieve with your trading, in my opinion. And it's just mostly detrimental to 9 out of 10 people. So the one candle tells you everything. I would just study, all right, well, what is the one candle telling me right there? It is coming above that high and it's respecting that. So what is it doing afterwards? Failing to create a fair value gap and then reaching this swing low right there. Perfect. Then we have a same respect candle right there, but it does not actually then want to retrace higher. It then continues lower a little bit. So what you essentially want to do right there is write down every single little thing that you might notice in price action. So where you learn something, like the one candle tells you everything, and then go into the chart, hindsight backtesting is perfectly fine. And then writing down every single little thing. So this might also, you can also use the call out right here, right there, and then seeing respect candle, and then making a screenshot in the top right, for example, at the camera, and then copy image, you can paste it to your Notion or wherever you want it to be. And that is how you want to do it. So essentially that creates a case study where you just have a certain case, and the case, in this case, the one candle tells you everything, and then just study it and how we deliver there. And in that same candle, you can now go into the lower time frame to see what actually happens there. So what happens on the 1 hour? On the 1 hour, we have, we have another long wick and we have that sharp turn right there, which we talk about. Perfect. So then right there, we can add another image towards that case study. So case study is essentially just studying that exact thing and just writing down everything that you come across. There's not a specific perfect way to do a case study or a bad way to do a case study. If you do a case study and you think you are doing a case study, then you are doing a case study and you are doing perfect. So that's what it's all about. There's not one good or bad way to do it, if that makes sense. Is it better to finish your A to Z lesson before subscribing to your mentorship because I'm saving up and I'm torn on what I should do? Yes. If you are thinking about the mentorship, then finish the A to Z guide. And not only because you'll have more knowledge going into it, so it will help you overall have a smoother transition where you might actually, the mentorship might actually get you profitable a little bit sooner because you already understand the A to Z guide as well. It's also to know, all right, do I actually like the videos? Do I actually like what he is teaching? And that will also give you an idea if you will like the mentorship in that sense. And if you don't, that's perfectly fine, of course. Ario, can you tell me what happened to the dollar and why it behaved like that and what were the signs to not trade that? Yes, we went over it more in depth at the beginning of this video. So if you want the more in-depth version, you can look at the beginning of the video, very early on. We reached this previous month's low. And when we reach that, we have this daily value gap right there. So we can continue lower off that. Which essentially, this is perfect, right? Now here, where it becomes very suspicious and where I want to avoid the trading, or at least looking at shorts, is once we have this previous day low right there, that swing low, that first target, we reach that and we have a wick right there. So not a body, not a fair value gap overlapping right there with that exact low. No, we have a wick right there. That becomes extremely suspicious right now. Because now if we want to retrace into this 4-hour value gap, then what could that lead to? Well, then that could lead to a sweep overall, because now we are retracing into that. So it's very similar towards Australian dollar, US dollar, and it's very similar to any situation really. Because right here, this is actually where, I'm not sure, it's 2 weeks ago where I took a trade as well, continuing higher. And we come into that, but not having a fair value gap exactly overlapping with that low that we took right now, creating a sharp turn, continuing higher, that becomes very suspicious that this might be a sweep. So we can retrace those steps, and the earliest sign that we might want to sweep something to then continue higher instead of continuing lower is that we do not have a fair value gap overlapping with the exact low that we just took, which is also what we saw on the dollar right there. So at that moment in time, it's not necessarily you should now look for longs and you should continue higher and you should have seen this move coming right there. No, that's not the relevant thing. That doesn't really matter. It's just there should be alarm bells going off in your mind and be like, hey, if I now want to look for lower prices still on the dollar, which means also if I still want to look at higher prices on Australian dollar, US dollar, then the dollar should have acted a little bit different right there. So there should be some suspicion in that sense as well. That's very important. Which value gap is more powerful, the higher time frame or the lower time frame? Depends on the context, but as a general rule of thumb, the higher time frame is more important and more powerful as well. Big target coming in next few weeks. Yeah, I think we mentioned that as well on the dollar. We mentioned it in this week, so not this past week, but the last week, the week before that. Currently, whatever the dollar is doing is sort of a do or die situation. As in, if it starts to disrespect premium rates right there, we will have a very clear target right there in form of the highs. So it's a little bit of consolidation overall throughout the year, what we have been seeing for the dollar. But if the dollar starts to move right here, starts to show clear direction, then we have insanely high probability, potentially, right, conditions coming up. So that could be very interesting. What do you think about using PD rates in premium and discount only? I noticed you never mentioned it, like optimal trade entry, etc. Yeah, personally don't use it, but the reason I don't use it, I'll go over that as well, is because it doesn't have to do that. It doesn't have to come back into a premium or a discount rate. Now, when it does do that, of course, it could be higher probability, but also low probability. And the reason I mentioned that is because, for example, right here, if we were to wait for only discount rates in actually the 50% of the range, so at the discount level, then right here, if we already want to continue higher, and I know price might want to continue higher off of that overlapping defense right there, then here I might want to long in areas where I already know price will actually want to continue lower instead. So that creates a little bit of a conflict right there, if that makes sense. So in that sense, I also don't use it because we don't necessarily need to come into discount or premium oftentimes, because like I mentioned as well, the definition of a premium discount rate is premium and discount rate. So it already offers a short-term discount and premium in that sense as well. So it doesn't always have to retrace back into a certain range. Then we are more so becoming supply and demand traders. But if you want, of course, you can test around with it. And that's just my experience, right? If your experience tells you, hey, I do like to use that, that's perfectly fine. That's perfectly fine. Hey, thank you, my man. Thank you. Can you look at Solana? Sol, for sure, for sure. Thank you. Thank you. Thank you. Let me see. Sol. Market cap, or do you want to go over the Sol US dollar right there? I'll go over just Sol US dollar right here. Let's see. This is quite nice. Close to all-time highs right there. Close to all-time highs. Just exploding higher. Man. That's crazy. So crazy, to be honest. I'm not a crypto guy, so personally, I can chart it, yes, but I don't know. I'm so bad with all the wallets and stuff. Really bad at that stuff. Let's see, what are we doing? We are running into somewhat of resistance right there at that moment in time. Next target is that swing high as well. After that, it's quite easy going. Saying fast price action will most likely happen. So we're seeing a little bit of a rejection right there. Now, if we can, ideally, I still think higher prices. Overall, the discount rate is a little bit more difficult here to see what we can actually look to continue higher off of. I would argue a little bit of retracement, new value gap right there, continue higher off that, to then reach all-time highs as well. I definitely can see it reach all-time highs right there. After all-time highs, I'm always a little bit more careful. I don't like trading all-time highs personally, because I don't really have anything to work with anymore. All right, do you know free backtesting platform? Oof, I'm not too sure actually. Not 100% sure. A free backtesting platform, I would almost, the first thing that comes to mind is an MT4 thing that I used to use. It was way before you had anything regarding backtesting platforms, etc. But other than that, not too sure. You're not answering my question. Let me see, my friend. Let me see. Excuse me. It's a bit chaotic. It's nothing personal. Wait, before I go over your question, my friend. For you, how many hours a day should someone study about trading? If you're simply studying trading, then my advice would always be 4 hours of fully focused studying. Where after it's not really, as in there's a certain boundary where after that you don't really take in new information anymore. So I would always argue 4 hours of full focus studying, and full focus meaning no phone, no distractions, nothing else in the room that can potentially distract you. Just trading for 4 hours straight, studying right there. And then after, once we get to the, towards the actually trading stage, it's a little bit different. I would not advise 4 hour fully focused trading, personally. Let's see. Turtle soup video. That's also actually what I was thinking of. We could do that. How can we find daily trade ID? Because I want to just trade in lower time frame. Yeah, for sure. So if you want to trade in a lower time frame, then the top-down analysis video still is the same essentially. So if we go over really quick what we mentioned here, then the monthly, the weekly can be quite quick for you, right? They don't have to take a lot of time. And that's what a lot of people think is when people, and not necessarily mentioning you, just in general, when people think they want to trade only the lower time frame and they want to scalp, for example, that the monthly is completely useless. And in some ways, all right, you could potentially look at the 4 hour time frame and understand what the monthly is about to do. For sure, I can see that. But the monthly takes you less than 5 seconds. It does not take me a lot of time. So oftentimes it's just from laziness, where people are just a little bit lazy and they don't want to go over the higher time frame. So here it takes me about 1 second to look at this and understand, all right, well, I now understand what the monthly candle potentially wants to do. Then the weekly takes me about another 5 seconds. Perfect. Weekly value gap. All right, interesting. Daily right there. All right, interesting. What do we have? Well, we can potentially trade into that weekly value gap. Now, this is where it becomes interesting, because if you want to scalp, etc., then knowing where the day will likely head towards, will it continue lower, continue higher? That's where it gets extremely interesting. So to take this example, we have a rejection off of that premium rate towards the left. So if we want to continue lower, then the first target is that previous day low right there. So now find fair value gaps that we can potentially continue lower from right there on the 4 hour. And this 4 hour value gap right there is where you want to play around with. So in that moment, you now want to look at, all right, 1 hour into the 15 minute, where you can eventually trade this breaker right there. And off of that breaker is where you can now go into the 1 minute right there to look at a 1 minute sharp turn right there, which we can continue lower off of. 1 minute following through on the order flow right there to then target those lows. So that is eventually how you want to go about your scalping. And yeah, that makes, this is 5 minute, by the way, it's not the 1 minute. This is the 1 minute right here, where eventually we continue lower. So that is how you would want to go about it. Essentially still the same, but you're just doing more time frames essentially. Let's see. I'm doing a case study about my strategy, but I'm doing on a different pairs, like major and minor pairs. Is it okay to do case study in different pairs, even though I'm only trading EU? Yeah, for sure. You can test the waters in different pairs, of course. if you decide to only trade EU, then my advice would be do case studies only on EU. And the reason for that is because then you just get used to the price action on EU. And you get very familiar with that. If you constantly, every single week, do case studies on the pair that you only trade, you will become so extremely good at trading that particular pair, that particular instrument. You will have insights that other people, that I personally don't have, because you have studied EU so really good. And I had that with, I personally not focusing on one anymore, but I used to focus on ES for a long time only, NASDAQ for a long time only, DAX for a long time only as well. Before that, even I traded Australian dollar, US dollar only, US dollar JPY only. And you will just get insights, you will get a lot of knowledge on that specific pair as well, where you will see things coming before other people see it coming, which is very interesting. Let's see. Ario, please answer this question. You said if we get a sweep, then we target opposing liquidity. But is this always the case? You also said it means deeper trades. So is that or full on reversal? That's a really good question. And let me clear that up right there. So right here, as soon as we get this potential sweep. Now, the way I want you to see this is we have bearish prices right here coming into that low. So we have the value gap holding right there. Then we reach that low right there. So at first we have been bearish. There's no real argument to be made because we have been bearish overall. But now we create somewhat of a small bullish argument, because if we sweep a high or low, there's a characteristic of that. There's a characteristic of, okay, well, this is not creating a value gap overlap with the low. So there's a characteristic of a potential sweep. At this moment in time, I do not expect a higher price immediately because it's not a confirmed sweep just yet. And a confirmed sweep is when on the 1 hour, for example, like we saw, we now start to create a new fair value gap higher right there. Then it becomes a confirmed sweep actually right there. So that is when we can expect higher prices. So right here, can we still see lower prices off of this? Yes, but I would want to see more confirmation, meaning I would want to see not just one simple fair value continue lower off of that. No, I would want to see definite, same with that sweep right there, one fair value higher, second fair value higher, one fair value lower, which we did not even get, to then a new fair value lower right there to confirm that we actually want to continue lower. So that is how it creates a 50-50 area where you require both more confirmation on both sides as well. So that's why we have to be very, very reactive right there, because it might just switch everything around. We might just switch bias and everything, if that makes sense. Let's see. When you are launching your prop firm, Ariel, not too sure. There's not a definite date on that. We can expect it potentially, I would say, a maximum of potentially 3 months. But not next week or anything like that. Next month, potentially also not really. Do the numbers 369 have any importance in trading? I'm not laughing at you, but it's always funny to me that I've seen that before as well. It's 369, not necessarily for me. No, they don't have any importance. I think whatever you place importance on will become important. So I also know people that are candle counting and somehow they make it work because they want to make it work, if that makes sense. So if you want to make the 369 somewhat work, then yeah, you potentially can make it work as well. Do you have capital to pay traders? Yes, we have. It would be very funny, you know. Do you have capital to pay traders? No. No, we don't. No. No, we're just going to not pay you out. That would be a funny answer. Let's see. All right, I have a question about timeframes. I always used many timeframes in the past for my analysis. Do you think that your timeframes that you are using are enough because of potential mistrades? Yes, 100%. And in this case, less is more. And believe me, everything I state and everything I have done as well, they come from experience. So it's not just, don't use these timeframes. No, it's more so, I'm telling myself, don't use those timeframes because from my experience, it's just a load of bollocks, if that makes sense. It's a load of BS. And the reason I say that is because using the 8-minute time frame will not enhance your trading all of a sudden magically, where it more so becomes confusing because you have all those different time frames that you are now working with. So I would always advise stick to just simple logical time frames right there. The 8-minute, the 2-hour time frame, etc. If it works for you, it works for you. But oftentimes it's more so used out of desperation because, like you mentioned as well, it feels like you're missing trades. So you need to use more time frames. You need to use more concepts because otherwise you might miss a trade. And it's more so desperation in that sense, where my advice would always be less is more. In this sense, it will pay off because it's very easy to go from, I have a daily PD rate. I know exactly into which PD rate I now need to go. Instead of going into the 1 minute, 5 minute, 2 minute, 3 minutes, it's a lot of mess. It's a mess. Let's see. Do you know AI books price action? Yeah, could be true. I'm not too sure. I'm not sure. I don't have the secrets of the market that a lot of people claim to have, that I also don't think they have, but they're just making assumptions. So I'm not too sure. But I like to believe it because it makes my strategy also a little bit more logical. Let's see, what is your take on the prop drama going on in this space? Well, I think, and I'm going to be honest here on this as well, I think a lot of prop firms, and this is coming from a 22-year-old, so maybe take it with a little bit of grain of salt, but I think the way I've been running the MMT, the way I've been running everything I've been doing here is quite professional. And I think the prop firm is lacking that. It's just lacking professional behavior. Just people make it to the payout stage and then get paid out. If people, you want to cut them off if they are truly doing something wrong before they make that payout. Otherwise, you just got to pay them. Just pay the payout, because it's your fault that you did not cut them off earlier. And then people like to blame the traders. No, it's your fault for not cutting them off in phase 1, in phase 2, just giving them a refund. So it's very important. I think the professional behavior is lacking a lot in the prop firm space. It feels like a little bit the same, and this is also coming from someone who has a mentorship. Like every single random person that was also a hype just starts a mentorship. For example, it feels a little bit like the same. Like every single random person just starting a prop firm and just goes with the flow. Don't really care about the professional behavior. Don't really care about their customers. It's like, I don't know. I think just having that, it's so much better. Also, I saw a lot of prop firms that have a mismanagement of their capital. For example, that, I don't know, spent their capital on yachts. It's funny, but they're just fundamental issues. It all starts with the basics a lot of the time. It's not something special. It's oftentimes just starts with the basics. But that's the way I view it. Bro, why didn't you make it to red and green to the candles? I was thinking about that actually, and I can't. I honestly can't. I just can't do it. It's just right here. Let me see. This is for the beginners channel, and it just looks, come on, it looks horrible, no? But I've been getting so used to my own chart, having it like this, that I can't look at the red and green candles anymore. It's like horrible. But for the beginners, I'm actually going to use that because this is very confusing for a beginner, I can imagine. Once you have your prop firm, you may have less time to make tutorials. Yeah, I'm running it with someone else as well, so it will still be, I will still be active here. No worries. Might have a little bit less time, but I'll try my best as well. I'll try my best. No way. I love the way you sing after dropping some gems to us. I do that? I don't even notice it myself. That's funny. That's funny. That's a good one. FX journey. You treat everything like you're looking for your daily bias. Exactly. And I mention this quite often as well. The top-down analysis and the daily bias is essentially the same way how you get to your entry pattern. So it's all the same. It's just fractal, where that was a huge breakthrough point for me actually, because I felt like the entry pattern was a whole new world all of a sudden. No, you're doing the same thing that you did on the higher time frame that you do on the lower time frame. But then it's just called your entry pattern because you're actually placing an execution, if that makes sense. That's a good one. I like that one. I followed your first enrollment. It was great, but sometimes some things don't click at the moment regarding the current price action on the actual cross. I'm not sure if I do it right. Guillaume, feel free to send me a ticket on the website or an email, and I'll try to go over it. Let's see. Or do you trade news? Depends on which news. But the what is it? The US dollar red folder news that is not the big three, so not NFP, CPI, or FOMC. That's perfectly fine tradable. So yes, I do essentially trade news. I mean, your trading and the enrollment of the FG was very difficult for me and confused me. What do you recommend? Go through it a couple of more times, and if you have any questions on that as well, and you truly can't figure it out, then feel free to reach out to me as well through email or through the ticket system, and just mention, for example, the live stream right here that I said. You can reach out right there, and we can go over it for sure. And maybe what helps me as well is write down all the questions you might have. So write down the questions that come up, and then potentially see if watching it again, you can now answer the questions slowly for yourself or through case studies. And if that truly does not work, then again, like I mentioned. Let's see. Brother, I'm not getting consistency. Is it because I'm trading too many pairs? I trade weekly profile. I'm feeling hopeless when even after doing all the analysis, I am getting losing streaks. Yeah, that's difficult for me to say, all right, you're doing this and this wrong because I don't have your journal or anything. But if you are saying, am I trading too many pairs? That might be a sign that you're already onto something. So you're probably already thinking, am I trading too many pairs? And if you're already thinking that and you're doubting about that, then most likely you are trading too many pairs. So try to narrow down your pairs right there and then see if that works. See if you get better results, etc. Alright, can you make a video about liquidity sweeps for run and combine them with trading plan? For sure. It's actually a really good one. Thank you. It's a good one. I will do that. Well, we need a serious class on money management and risk management. That's also a very good one. Risk management is on the way. Money management is not on the way yet. It's also, it really depends on the scenario you're personally in. That could be a very nice one. I like that. I like that actually. Let's see. It's a good one. Coming into the bullish fair gap and creating bearish fair gap. What can we do in the entry time frame? Give some solution for that. Yeah, more confirmation. That's the easiest answer right there. So if we have a bullish fair value gap and we're running into that with a bearish fair value gap, then oftentimes I do not like that because there's a lot of momentum coming into it. So for example, the weekly right here, weekly fair value gap right there, we're running into that with a daily fair value gap. And I do want to see that because it's a sharp turn on the lower time frame, my entry pattern time frame. But I do want to have more confirmation as well right there. Ideally, that fair value gap then failing. So might give a rejection to then creating new fair value gaps lower. Let's see. How do we join the Discord? It is on ario.io. Or if you talk about the Funded Friends Discord, then it is the previous video, or you can go to the Funded Friends Twitter. The most recent video. All right, I am going to end it here, team. Remember what we talked about on the dollar. I want to thank everyone that was also here. Thank you everyone for stopping by in the live stream. And thank you everyone that will watch it after this as well, of course. And then I'll see everyone in the next one. Have a great trading week. Be careful with whatever you do as well. Be careful with your risk management, of course. FOMC statement is coming up on Wednesday, so keep that in mind. And I wish you the best of luck. Thank you, team. Love you all. And see you at the next one. Thank you.